Hey everyone, me Kevin. We just got a warning shot, and we're gonna talk about that warning shot, but first we gotta clear up a few things. The first thing we gotta clear up is I keep hearing about Japan. Why was Japan's stock market flat since the 90s? Well, how's this for you? Their GDP was flat since the 90s. Let's try to compare that to the GDP of the United States. Little different, eh? So, this is the 90s, this is where we are now. The charts don't lie. And since the charts don't lie, let's take a look at a few extra charts before we talk about the warning shot. First, I'm tired of hearing about the relationship between bond yields, the 10-year bond, and tech stocks. It is not as consistent as you think. Regularly we hear, but bond yields go up because people aren't buying bonds, tech stocks are gonna sell off. Yes, sometimes that happens when there is a spike in the velocity of the rate, but which is exactly what happened this morning. Take a look at this. Sometimes this is exactly true. We saw right here, just so you can verify this right here, see this little blue tealish line right here, turquoise-ish line, Tiffany blue line, whatever. That's the Treasury, okay? So we saw the Treasury yield spike with real fervor here, that velocity of the spike. That means it went up really fast in a short period of time. It didn't cross the x-axis far, but it crossed the y-axis far, right? When those crazy spikes happen, yes, we can see stocks sell off. And that is what we saw this morning. We saw the tech sector, the NASDAQ, 100 was down about 2%. But throughout the rest of the day, what happened? Well, from this point right here, after this jump, we had the bond yields essentially continue to rise if we just draw an average line here. But what did the stock market do? What did the tech stocks do? The NASDAQ 100? Well, after their sell-off, they also rose. So the relation isn't as clear as people like to make it out to be. What I keep referring to is something known as the velocity, that rate of change. When we get these crazy spikes, that's often, not always, but it's often when we see more of a reaction in the stock market. But generally, I strongly believe the stock market looks at this and says, hey, look, the bond yields are going to go up again over time. We are at historically low bond yields, especially for the 10-year Treasury. In fact, take a look at this. Just to try to make us feel better here a little bit, this is the 1 year. We are right here at 1.62. It makes us feel like we are at all-time highs, right? Oh my gosh. But let's go to the max. This is the max view that we have here. These are the 80s right over here. If I just hide myself for a second, you can see the trajectory of bond yields here has been straight down. So what? We've got a little bit of a rise over here. They're going to go up again. Even if they go up here to 3%. Big deal. 2010 to 2019 was still a phenomenal time to invest in stocks. So we got to separate this whole bond yield drama. But I got another chart for us, okay? Let's talk about inflation, because that's really what we care about, right? I don't think anybody cares about the 10-year. What we care about is inflation. Folks, this is inflation. I just wanted to show this in charts because I feel like I'm talking myself until I'm blue in the face. Like I can only have so much coffee talking about why I think this whole inflation push is overblown. This is inflation since the 80s. It's pretty much straight down. It's certainly straight down over here. But even from these levels, look, you got inflation sitting around over here at around 5%. We're way lower. Here's 1.68%. You know, we were higher over here. This is about midway in the chart here too. So with these red lines, it becomes a little bit easier to just see this. Let's do a green line here. It becomes a lot easier to take these points here and then draw a connecting dot. And you can see we have this consistent downtrend in inflation. There's no secret here. Oops, that's definitely not the eraser. There is no secret here that inflation is trending down. The problem is, and this is what freaks people out, and we're gonna have something exactly like this happen again right here. See this? Look at this blue line here. That's CPI, and the yellow line is Consumer Price Index minus food and energy. And we can see the CPI pricing here. This is back when gas, I remember this, back in like 2009, gas was like $5.50 a gallon. It was ridiculous. So out here in California, it was like really expensive like that. But I think gas prices everywhere just went up like crazy. We saw this crazy jump, we saw this crazy fall, and that's why you have a much flatter line when you don't look at food and energy. That's the problem we're having now too, right? Food is more expensive. When you go to the grocery store, it feels like the cost of living is higher because energy costs are higher and food is higher, and a lot of this has to do with supply chain disruption still from COVID. And so that can fluctuate more, which is why it's also nice to look at the yellow line, which shows us, okay, well, what's the measure of inflation without those two things? And they both tend to average out over each other, right? They're both going in the same direction, and that's down. Are we going to get some more of the zigzagging over here? Probably. In fact, what's very likely to happen next is we're probably going to see certainly this like tealish, Tiffany bluish line. Let me try to grab one that's similar but not exact. All right, here we go. So my expectation is this line is going to go up to somewhere around, it's not going to go as high as 5%, but it's probably going to go up to that 3.5% range. Wouldn't, and the yellow line could honestly probably chase that or trace that as well. We might even see something like this where we see it go to like 2.5%. Then it goes up to like 3.5%, stays at 3.5% for a bit. And then comes down again back to somewhere maybe around 2%. So maybe we'll erase a tiny little bit here. This is maybe what we'll see, and this is, we've talked about this so many times, the base effects. We won't re-explain that comparing back to last year. But even if I draw that in there, come on, it's a drop in the bucket. The market is overblowing this inflation fear, in my opinion. In my opinion, I could be wrong. Dude, I'm drinking out of a level 99 health cup. And it's black coffee, and I just ate cookies. It's the most ironic thing. Anyway, this is inflation zoomed in. This is how we panic more. This is how we get the market to panic. Because when you zoom in over the past 9 months, it's a whole lot more. This is why I also like zooming out on things. Oh, take a look at this. May as well show you this. ARK, this is averaged on a weekly basis, so it's averaged together here. But remember the last time I did a video on ARK about how we've got these massive outflows happening, how people were dumping ARK Invest funds, and everybody's like, Kathy's the has-been, it's over. These are paper-handing sissies who dumped ARK Invest at the bottom of the market. Like, let me hide myself here, okay? This number right here, this went down, I want to say this is somewhere around $660 million of outflows in this week right here. Those same silly paper-handing sissies who sold out at the bottom of the market, which in my opinion were mostly funds, because funds can invest in Kathy's ETF, right? It's not just retail investors, but certainly paper-handing sissies sold at the bottom. Now keep in mind, if you go on Urban Dictionary, okay, I did my research, paper-handing means you sell when stocks are going down. Just because you sell a stock doesn't make you a paper-handing sissy. Paper-handing sissy when you sell when things are going down because you're panicking. And if you did, I'd like, whatever, it happens. You don't have to tell anybody about it. Like, I'm 100% transparent with every trade I do, so I have to. But yeah, I sell stuff when it's up. But anyway, as is classic, as soon as the market starts recovering, the net inflows going into ARK Invest funds have been through the roof, which is one of the reasons you tend to see the smaller stocks that Kathy Wood also invests in rise up along with him. All right, so what is this warning shot that we experienced? Well, the warning shot is essentially what happened early this morning. Early this morning is you wake up and you're like, oh my God, all the tech stocks are down 5% again. Yesterday, I gave the warning. Yesterday, I said, be careful. These paper-handing sissy suits are going to be back, and they're going to come back and go, I don't know, I think inflation's coming again. Even though yesterday, I showed you a Bloomberg article going, oh, suits maybe overthinking treasury yields, flood back into tech stocks. I showed that video, and then I said, but be careful. These suits are so emotionally broken, they can easily flip right back. And a little bit, that's how we opened the market today. Tech was down solidly. I mean, Tesla, NIO, some of these stocks were all down 5, 6, 7%. Now, they recovered through the end of the day as that relationship between bonds broke apart again, and even though bonds were going up, tech stocks recovered. But what was that? It was a warning shot for us. I sound like a broken record, I feel like, but pay off your margin or pay down your margin. It's so important. So that would, I honestly would rather pay my margin down to 0. And then when we get this volatility come back, because the next 3 months are going to be very volatile. The CPI data that's going to be coming out over the next 3 months, very volatile. This month was benign. It was a blessing. It was a bailout. Next 3 months, it's going to be nasty. And you want to be prepared. So personally, I think, hey, look, if you can go take an extra shift, make some extra money, and get some more money on the sidelines so that when we have more of these dips, you can go shopping more hardcore, do that. Even if that means paying off some more of your margin. Like, get to zero. It's okay. It's a relief when you're at zero. That way, when the market falls, you're like, oh, sweet, I got 20%, you know? And when you're buying low, you're kind of hedging your position anyway. So that's my take. Hopefully this update helps you. If you found this helpful, consider sharing the video. Make sure to check out that coupon code down below. And folks, we'll see you next time.